You are listening to Mining Stock Education.
I just see so much opportunity, and it really shows you the contrast between a bear market and a bull market in terms of seeing opportunity. Because I would say, even though I was buying companies in the bear, I certainly didn't have the optimistic view where so many things looked like opportunity. So you can definitely see that the sentiment has changed, and it's definitely, I've caught the bug myself.
I'm Bill Powers. It's Mining Stock Education. Thanks for tuning in. Well, last week was the Metals Investor Forum and the Vancouver Resource Investment Conference, which ended on Monday. There is a roundup which focuses on exploration. That conference is going on in Vancouver this week. But Brian, I saw you in Vancouver at both of those Metals Investor Forum and Vancouver Resource Investment Conference. You got a lovely country, the land of the paper straws and the wooden forks when you get carry out. I was afraid I was going to get some splinters there eating Chinese carry out. I was like, in America we get plastic, not in Canada. But what were your reflections about the conferences?
Thanks for having me, Bill. It was a great 4 days in Vancouver, not only because the weather was so nice versus Toronto, but the conferences were well attended, and I think more than ever for me, it was such a great networking event. Meeting new companies, listening to new stories, but rehashing with other people and listening to what they think about this year and sort of what happened last year. And so for me, it was an excellent 4 days, and I've got about 10 pages of notes I need to go through to sort of sort that through. I just see so much opportunity, and it really shows you the contrast between a bear market and a bull market in terms of seeing opportunity. Because I would say, even though I was buying companies in the bear, I certainly didn't have the optimistic view where so many things looked like opportunity. So you can definitely see that the sentiment has changed, and it's definitely, I've caught the bug myself.
And so Metals Investor Forum had really good turnout. What they were saying that this could have been the best turnout. I think I've been to 4 Metals Investor Forums. This definitely, from my vantage point, that was the most attended. Like you said, the vibe was really good, but it's not fully reflected in the share prices yet. So is this what you say, Dave, where it's just so all of us trading the shares amongst ourselves and the outsiders haven't arrived yet?
Yeah, I mean, we've been trading amongst ourselves for quite some time. I mean, the retail investor basically left in 2012, 2013, and they've yet to return. We basically, as far as the mining sector is concerned, we've had a couple of 6-month bull markets that were followed by 4 or 5 year bear markets. But inside of that, we've had a lot of success stories. We've had several juniors taken out at nice premiums. We've had bifurcation in the market of the best companies. I mean, it's basically, you have to sharpen your pencil now and invest in the right companies. Before, when I got in the sector 20 years ago, I got into it in the beginnings of a bull market in the junior sector, and you didn't have to be that good of a stock picker. Unfortunately for me, because back then I really didn't know that much, and I was able to do really well without having very detailed knowledge. Now I've got the detailed knowledge, but as far as the companies are concerned, you really have to sharpen your pencil and do your due diligence and pick the right companies to hold.
Brian, talking to the companies themselves, was there any comparisons they made between the two conferences if they presented at both?
Right. Yeah. Actually, yeah, there was, and I was well, not surprised, but it was interesting to hear them talk. A lot of the issuers that I talked to that did present at both or were at both just reiterated how much they like the Metals Investors Forum format. Companies presenting with the corresponding newsletter writers, the sort of intimacy of, or the smaller conference vibe was what they all said that they preferred. Now, I bet if I talk to more of the people presenting it, or issuers at VRIC, maybe they would have a different comment to make. But yeah, it was interesting to see that they show so much value in Metals Investors Forum in that certain format. And a conference like VRIC has been around for so long, and really, I think, epitomizes that sort of traditional style of retail conference. And not that there's anything wrong with that, but I think Metals Investors Forum has really hit its stride, and I'm proud to be a part of it in the way that I am. And I think that's, certain things like that are probably where conferences need to go in the future to sort of differentiate themselves from all of the choice out there, because there's more and more choice. Just like there's more and more companies, there's so many different styles of conferences out there for the retail investor to go to. So more and more, there's going to be those little nuances that separate them. And it looks like the Metals Investors Forum has really stepped up.
A key part of growing as an investor is attending these conferences. You mentioned you have 10 pages of notes. Can you share with listeners like your approach to these conferences? Like, who'd you talk to? Why'd you take 10 pages of notes? You were a presenter at one of the conferences too.
Yes. The first thing is, I didn't used to do it this way. I would probably on the flight home, that's when I would sit with my notebook and kind of go through. And like I said, I would say this is easily the best 4 days in Vancouver January conference week that I've had. I took so many meetings with companies that are already in the portfolio, plus new ones, that it was almost every 4 hours I was going back to my room and writing a few notes, just so I didn't let those certain thoughts go. And so I had, again, 10 pages of detailed notes. And especially on the companies that are new to me, there were certain things that stuck out in the conversations that I didn't want to let go, and thoughts. And the interesting thing is, so on Friday, I met with a couple of new companies, and I thought, these look really good from that first meeting. I need to dig in deeper. And I did a little bit of reading at night before I went to bed. And then I woke up on Sunday, and actually I scratched those 2 ideas, which is really interesting. And I like this format of the way I'm doing it. And I seem to adapt my process as I go along here at every year. And this new one works much better for me, because I've already scratched 2 off the list, which saves me probably 2 days now. So it's good.
So Brian, your YouTube documentary following you to site tours is called Field Notes. So what type of notes would these be called? Flight and hotel notes, or what would we call this?
Yeah, that's a good question. I'm not sure. It is sort of field notes, because it's conference, going to site of the companies is definitely in the field. But as an investor, I would say the conferences are sort of like your battlefield, and you're going out there and you're trying to decipher which companies or which stories to actually put more time into. And the better you can get at, breaking that down, saves you so much time, because you could probably spend a couple weeks looking into these things in detail and then come to the conclusion, I don't like this. But you only want to do that with less than a handful of companies. You don't want to do that with 20 because it's just too much. So forming that list and then breaking it down to your criteria is so important. So it's a big part of what I do.
The 3 of us were on a multi-day site tour in Nevada in 2019. Dave, I remember you having a notebook at that site tour and you jotting down things when the executive would talk in the Suburban. How do you approach these conferences in terms of, taking notes, meeting people? What are some of your strategies?
Yeah, unfortunately, I wasn't able to go this time because the fires were a little too close to home. I had to pretty much stay home with my family, but it's too bad I didn't go to. It sounds like it was a good one, but yeah, I mean, I'm constantly taking notes, and as far as the one-on-one meetings, I really like to go in the personal ones. I know in the age of Zoom, I have such great relationships with all the companies that I cover and that I'm invested in, and even some of them that are on my watch list, that I could just send them an email and say, hey, it's time for a Zoom call, and do that at any time. But one-on-ones are a lot better. You really get a feeling of where they're coming from and where they're going, and you're talking with a lot of the other management teams, and you're talking with other investors, and to see where they're coming from, and you're just getting as much input as you possibly can to form your own opinions about what's going on with not only the companies but with the sector. But basically, the companies that I'm already invested in, I'm trying to get knowledge that isn't in their presentation, things that maybe are happening with permitting, or drilling or things like that nature, getting more details that aren't in the presentation, especially in investment details, because it's really important for me, for the management team to participate in all the financings that are taking place, and also buying shares in the open market, being fully aligned with shareholders. That is really important. So, yeah, I mean, when I come back, I have just pretty much a full notebook of notes of chicken scratch, because I mean, who writes anymore? The only time I write is when I'm taking notes. So I see my penmanship is getting worse, but thank goodness that I can at least read my own chicken scratch. So it's it's a lot of work, but it's a lot of fun, because it's getting as much details as you possibly can that's not out there in the public, that you can relay to your subscribers that are also investors like yourself, like myself, and like the management who are investors also. I mean, we're all investors, and we all have the same goal. And that's another thing I love about this sector, is everybody's rooting for everybody else. Because if somebody has success with the drill bit somewhere, that brings more attention to the sector, and it's great for everybody. There's never a sense of, look, that company's doing really well. I'm upset that that's happening. I didn't get a chance to get into it or whatever. You never feel like that. I mean, it's all we're all in this together atmosphere in this sector.
And the darling of the conference was A-Mark. I think they were up 172% or something like that on Friday. So that was it was kind of cool to see them present, and just the glow on their face, like so excited. Some executives are depressed, others like A-Mark were like glowing like an angel.
Yeah, that's the way it happens in the sector, especially it's when it's been so depressed lately. It's so under-owned and forgotten, and of course that's the opportunity. And of course, we're all trying to stay solvent until the sector gets rational, and it's just presenting these incredible opportunities that if you're investing in cash and you're staying away from margin, you're basically being able to buy these companies right now at perpetual warrant prices. You don't even have to take place in these private placements. It's something that during the last bull market, I wasn't an accredited investor when I started. And I said to myself, wow, if only I was an accredited investor, I was able to get these stocks cheaper and get a free warrant, and I do so much better. I have all this leverage. Well, now you don't even think that way anymore, because like I said, these stocks are trading at perpetual warrant prices that never expire. You just have to have a lot of patience. But
but the Treasury determines their expiry, though, don't you think, Dave?
Right, exactly. The Treasury determines that. But you could pick up things right now that there's these serially successful guys, these these company makers, these honcho mining entrepreneurs and company builders, that Rick Rule talks about. You got to invest with the best, right? Well, there's a lot of instances right now where you can accumulate shares at less than their cost. I just recommended and purchased a stock for myself and for my subscribers in a company that's trading 35% less than what one of these guys has been accumulating it for. And these guys know what they're doing. They have they give the company the access to capital. They made so much money for investors in the past, and yet, even though a lot of the investors even know that they're associated with the company, they're still trading at a discount. That's how depressed this sector is. So, there's so much opportunity out there. But like I said before, you just got to get into the right ones. You can't, you can't be holding turds during this situation in the sector. I mean, the last time I remember, I really didn't know what I was doing, and I ended up holding companies that that were low grade bulk tonnage, that if I knew what I was doing, I probably wouldn't have accumulated them. But I looked at the ounces and all these other things, and I said, okay, these are the ones to hold on to. And fortunately, that's what happened at the end of the last bull market. These majors, they ended up adding to their ounces by buying these low margin bulk tonnage multi-million ounce projects, that if I knew now what I knew if I knew then what I know now, I probably wouldn't have invested in them. But that's the ones I made the most money in. But now you can't do that. I mean, you have to. You have to look at permitting. You have to look at dilution is a big one. These companies, if they got too many shares out to begin with, and they're at an earlier stage, and they're maybe at the PEA stage, or not even close to the pre-fees stage, and they got too many shares out, then you're going to dilute yourself. And by the time the company's got to a feasibility stage, or that they're at the finance stage, and they're going to have too many shares out, and their upside's going to be washed out. So there's so many things you got to look at, and but it is like Brian said, it's starting to get exciting again, because you see the gold price breaking out of this symmetrical triangle here today. It's already broken out of the symmetrical triangle in Canadian dollars, in euros, in Swiss francs. So it's the US dollar price that's now breaking out of this now 12-week consolidation triangle. So it's starting to get exciting, but it is you have to do a lot of your due diligence and pick the right companies.
I'd like to get your gentleman's take on investing in copper developers. So via conversations, some meetings I had, as well as some things I heard at one of the conferences, two different perspectives, which I think both can be true. One was that if you're going to invest in copper, invest in the big ones that the ultra big boys eventually will want to buy. Another perspective that was shared with me is, well, if you're going to invest in a copper developer project, invest in one that'll actually be built, that doesn't require $6 to $8 billion to build it. Brian, maybe if you could share your thoughts first.
My answer is yes.
It's both.
Go big or go home.
Well, I like all those points.
What about go medium and get built, Dave? Huh? That's the other perspective.
I think if you start looking at copper developers, and whether you're going for size or whatever, you're probably going to end up looking in South America. And then outside of those two factors, going ultra big, I still think that the people involved are a huge part of it. I think that you have to look at altitude. Altitude is a big concern that I think gets sort of overlooked by a lot of investors. Access to water. If you're in Chile or in Argentina, you need to have access to water. These are things that, and then the other side, if you're lower in altitude, maybe you have too much water. That can be a problem too. But these are things that I think that don't really get talked about. Like what you just mentioned were sort of overarching themes, and those can be what you choose to focus on. But it's very much what is what interests the investor. And for me, I've got one main copper play, and it's a people play, and it's Solaris. It's big, but it's most importantly, it's an Augusta Group company. It's Richard Rourke, and he's got a history of developing companies and then selling them. With them redomiciling after the Canadian government's tremendously brutal overreach last year, they've redomiciled. Now they've allowed themselves to be acquired, or a minority stake taken in them. And in that, I think that's excellent. And one of the things I said in my presentation is that I think in terms of the copper market, that M&A, or even not even full out M&A, but minority positions, I think could be a theme in 2025, where maybe the copper price doesn't break out, but maybe you start seeing more minority investments, or maybe you see some takeouts. Because I would say, nuts to philo, we really haven't seen a lot of M&A on the copper front. And maybe that's something that gets the equities sort of stirred up and more action there. So I think just like any of the stocks, I don't think there's like one theme that's correct. It's going to be what you're sort of interested in and how you think the market's sort of going to develop. And like I said, for me right now, for in terms of copper plays, I'm solely concentrated on a people play that I think has it checks all the boxes in terms of what you want from a copper company. And those people are that X factor.
For copper, for you, it's go big or go home. Is that how you're going to approach it? Or
Well, I mean, I echo everything Brian said there. I mean, he's absolutely right. I mean, I have one big copper play too, and it's Arizona Sonoran, and and they've got the right people. They've got the access to capital. They got a partner now. I don't expect any more dilution. They're on private land as opposed to federal land. That's a big one. Permitting is everything these days. I mean, you could get diluted out of your position waiting for permitting in a lot of these projects. Gold, I mean, in copper is you have the same situation. It's something. Now that you've got this Glencore, Rio Tinto talking about merging, that's bringing some attention, some mainstream attention to the sector. I'm seeing mainstream news stories about this now. We had the failed BHP Anglo American happen last year, so that might get reignited again if this Glencore Rio Tinto merger takes place. I mean, that's what we need. We need to see these big mergers coming into this sector, bringing more attention to this sector. These companies need to get bigger, need to be more liquid to attract retail investors, and especially in copper. Also, it's something that we have to take a look at, and it's bringing that merger has brought a lot of attention to the sector, and but as far as I'm concerned, as far as juniors are concerned, yeah, I mean, I'm with Brian. You have to look at all those things that he was talking about, and also I don't think he mentioned social license. The people have to want it, and especially in South America, you have to make sure that the communities are on board, and these companies have really good relationships with these communities.
You both were investors in O3 Mining. Brian, I think like 4 years ago on this show, you said that was your number one pick when I was interviewing you. Dave, that was one of your take under successes in your portfolio. So I bring that up to say, for the sake of learning, my question is, Dave, you mentioned how you know so much more now than you did during your first bull market, right? Okay, so you're actually informed, not just lucky. When you look at a developer, and sometimes you can only value it as enterprise value per ounce in the ground with a decent management team with access to capital. Okay, well, that's not even enough, because here we have a takeover. There can be other incentives too, like, is the executive absolutely worn out and just wants to get rid of this thing and move on to the other thing? Can they make millions of dollars in change of control fees? And they could have had seed shares, so they're going to make money on the seed shares and the change of control, and they're ready to move on. There's so many other factors to look at too with some of these even development stories that have been out there, right?
Yes, I mean, absolutely. It's funny you said take under success story. I mean, the success was that myself and my subscribers didn't lose money. I think we made 15-20% on the deal. But yeah, I mean, it's frustrating because all the points that I brought up to my subscribers when I first recommended the stock to them and started taking a position, those are the reasons why it got taken out. I mean, the big reason was, okay, Agnico is going to need this to feed Malartic, and they're probably going to end up taking it out, and it's going to be at a much higher price. I didn't think it was going to be at $57 an ounce gold in the ground, and it was, I mean, O3 had 40 million cash in investments at the time, and they were moving towards I think it was a feasibility study they were moving towards, Brian, at Marban. Is that correct? Yeah, they were moving towards a feasibility study at Marban. So, I mean, every time I'd see Jose, each time he's, like you said, he seemed a little more worn out. And I remember the last time I talked to him, I said, would it make sense if you guys would merge with Probe? And then that would, then that would be a much more attractive company for a takeover. Because I was in the hopeful, because I'm a Probe shareholder, and I covered that stock in my portfolio and my newsletter as well. And I thought if those two companies merged, then they'd be a much more attractive takeover eventually for Agnico at a much higher price. And this is what ended up happening was Jose ended up taking the money and running. I mean, he got a change of control payment of $2.7 million. So of course he liked the offer. And I think it's about to be final here in a couple days. I saw a shareholder came out and spoke about how cheaply it was going, and people should not tender their shares hoping for a better deal. But I don't see that happening. But like I said, fortunately, my subscribers and we did end up making money. We didn't lose money on the deal, but it was very disappointing. And M&A in the sector is positive, but we need to see positive M&A. We need to see more takeovers, not more take-unders. And lately, we've seen more take-unders than takeovers.
Brian, your thoughts?
Yeah, disappointment. So I sold O3 a while ago now. So this didn't affect me as much because I had already sort of dealt with the loss and moved on. And I think
good for you.
yeah. And that's just part of being an investor. And I think what it did for me is just reiterate that I think that really these companies are always a moving goalpost in terms of your view of them. And whether it's a marketing issue, whether it's a G&A issue, there's so many things or so many ways you can lose money investing in these crappy companies. And, this just reiterates that you can't take your eye off something and let things just roll without making a decision, because every day you don't sell, you buy. And O3 was the perfect example of that. And highly disappointing. They were tremendously undervalued when I bought the shares at around $2. And that's why I was so confident in that value being recognized. But for a number of reasons, it just never got recognized. And don't forget, like the craziest thing is that the original shareholders, when this thing RTO'd, were at $3.88. And I know some of those shareholders. I know the millions of dollars that they put in. That's the reality of this situation. And like you hinted at the end, Bill, and this is what it is. But the management teams don't usually lose in situations like this, and I don't think this is the case in this situation, because Jose did buy a bunch in the open market, and it was an RTO. So I don't think he had like super cheap shares, but he still recouped the change of management fee. He was taking a healthy salary. And so it's not a loss. The only thing it is these sorts of things do have a tendency to linger, especially with I would say the smart money in the sector. And while the Benavides have a great name, it's going to hang on Jose's back for a while. And I don't know what kind of new deal he's going to want to be in, but I can guarantee you that, this won't be seen as a success. And there's going to be a reluctance to give him money in the future.
Dave, do you want to add anything else before we move on to my final topic?
I mean, great points by Brian. Absolutely. Yeah, I mean, it's a blemish on his record, unfortunately. But yeah, I mean, Brian made that great point of you can't take your eye off the ball on any of these things. You have to constantly be on them and be up to date on everything that's going on. Factor in market circumstances, factor in project circumstances, sector circumstances, what's happening in the area. You have to factor in all that and keep on top of it. And that's what I try to do for my subscribers. I mean, that's why I hold it to no more than 20 companies, because you got to do that for 20 companies, and to some degree 20 more companies on my watch list, because when we had to sell O3, then I had to replace it with something else, and you would want to keep on top of those companies as well.
Mm. My last discussion point, gentlemen, for today is regarding forward-looking statements that executives make. They have to make it as part of these speculative, trying to raise capital to advance something. And Brian, I was thinking about how at one point you and I wrote significant checks into a little oil junior. We were in the back seat of an SUV, and the CEO was in front getting annoyed with me because I was trying to find out what's the projection? How are you going to grow it? And he shut me down. I said, well, why would I invest in it if you're not going to tease out something for me, like some sort of forecast? Who else am I supposed to get it from? So it's the job of the CEO to lay out these forward-looking statements. Hopefully they're honest and realistic. But I heard a statement at MIF that I've never heard anything quite like this, and it came from the Silver Tiger CEO regarding his development project in Mexico, Silver Project, that he said, matter-of-factly, I will be on this stage a year from now with my permit in hand. And he was very emphatic. And I said, I've never heard anybody say anything like that, especially from permitting. Every time I hear a CEO say that about a permit, is like, we hope to, we expect to. If all goes well, you kind of give yourself a little out, because a permit is permission from the government, and you don't get to determine if they give you permission or not, right? You can do everything on your side of the equation, but maybe the other side doesn't cooperate. So your reflections or your thoughts to that, to definitively say I'll be here with my permit in hand. Either one.
I think it's a big risk on his part to say something. Yeah, especially when
somebody sent that tape to the Scheinbaum administration.
Yeah. But I guess I see it from both sides. It's a huge risk to say something like that, especially as emphatically as I guess he did, because people will probably remember that, and so we'll see a year later whether he was putting his money where his mouth is or what. I guess the other side. And there's always a balance here. I also don't like the guys that go up there and, Bill, you were alluding to with the oil junior, where they don't say anything that's sort of forward looking or marketing promo wise. I think the contrast is the other way, where people don't say enough to catch people's attention. So it's that happy medium, and definitely with Glenn, he's one of the best salesmen that I think I've ever met. So it doesn't surprise me that he said something like that. But we'll see. We'll see where that goes next year, because the other thing is, you want management to put out what they're going to do and stick to it. Now, permitting, he doesn't actually have that much control. He can only submit his documents and hope it gets approved. So again, it's a big risk on his part, but we'll see if he gets it.
Pave, your thoughts?
I think he missed the memo where you underpromise and overdeliver, not the other way around.
Sandbag.
That's incredibly dangerous. It's a fine line, right? You want to be hopeful, but you don't want to basically tell the audience something that you're not going to be able to deliver on, especially something that you have no power in the say-so of delivering that promise. So I like management that are serially successful, and they're serially successful for the reason that they do overpromise, they do underpromise and overdeliver, as opposed to the other way around. They raise money when they're supposed to raise money, and they take the money when it's offered, and they're mindful of dilution. And as far as permitting is concerned, you have to give a date to where we expect this to happen. We expect to have, the environmental permit by the end of 2025. You don't say we will have the environmental permit at the end of 25, because you don't have, you don't have control over when you're going to get that permit. It's funny. 20 years ago, when I first got into the sector, permitting even wasn't something we even thought about. permitting wasn't a thing, but now it's everything. So it's, like I said, it's incredibly dangerous, and that's gonna come back to bite them. I almost guarantee it.
Before you gentlemen go, Brian, your website is juniorstockreview.com. What can listeners find there?
You can get access to my newsletter, which is published weekly, Junior Stock Review Premium, market commentary. All my picks are ranked, and all the percentage allocation are written there. And of course, I try to answer all my subscribers' questions.
And to help you sell your newsletter, what were your 2 best picks? You don't need to say their names, but percentage gains in the last year.
I will say, because it's easier.
Okay.
Montage Gold was upwards 300% at its high, and G Mining was just over 250%. Last year was a great year for the portfolio.
Dave, your website is juniorminerjunkie.com. What were your 2 best picks over the last year, and what do you offer?
Well, I could say Montage as well. Remember, Brian and I had discussions over this company earlier. We just, each time we saw each other, we'd look at each other and keep shaking our heads like, what is going on? Why is this so cheap? Let's just buy more. So, Skeena was the other one that I did really well on. And as far as my website is concerned, you've already mentioned it, and I try to put out an article every week on Kitco. I skip a week every once in a while. That comes out every Friday. And as far as my newsletter is concerned, it's an over-the-shoulder type teaching process. I teach people how to manage risk and how to do the proper due diligence in these companies. Before I recommend a company, I'll do a detailed report, and then I'll send it out to my subscribers and say, hey, I'm going to be taking an entry position in this stock. And then we all try to get in at the same time. And basically, it's completely transparent. I mean, they know what I bought, what I sold, how much I paid, how much I lost, how much I made. And it's also like a one-stop shop newsletter. I go into the macro, I go into technical analysis, I go into all the press releases of the companies, technical analysis of each individual company. It's a lot, but it's also a labor of love. So it's something that I enjoy doing, and it's basically been very frustrating for the past few years. I know for Brian and myself, but it is a learning experience. It's a constant learning experience, and you're learning something new every single day. And as far as my subscribers are concerned, they're wonderful people, and I try to answer their questions within 24 hours, and they're very learned, and they ask very learned questions, and I learn almost as much from my subscribers as I do from my research that I do in the sector.
Yep. I appreciate your gentlemen coming on the show, and you guys are unique. A lot of newsletter writers will not mention their losses. You both mentioned losses along with the gains because you're real investors doing it. Thank you for coming on the show, and I'll be catching up with both of you again. Thank you.
Thank you, Bill.
Thanks, Bill.